So our trading idea of the day, we start the first one will be our earlier stack. So the stock has been our buy on 15 January, which is during our regional traders almanac. Now the gain was pretty mild as the stock about 5.4%, slight peak at 2 ringgit 81 cent, missed our first target at 2 ringgit 84 cent. The subsequent decline or the consolidation saw the stock is building a new baseline within this major 200-day moving average again. So that tells you that the remain, I would say, interrupted, which means uptrend stay pretty much intact. Medium-term bias remain neutral, largely due this of the range bound between the current low at 2.55 to 2.82 cent. But regardless, we think there's decent chance for the uptrend to continue, following a momentum picking up recently along positive reading in both RSI and MACD. Trading volume also slightly improving, given that indication that the stock could challenging the current high and make it start a new upcycle ahead. So given the better or attractive risk to reward ratio, as we reach about 6.7%, which is actually a new and higher support level has been revised higher, when potential upside of 30%, risk to reward ratio almost 1 to 3, 2 to 3. So we think there's decent chance for the ongoing uptrend to continue. So we put our new target slightly higher at 2.99 cent and 3.36 cent. While cutlass below 2.56 cent. For quant score, we are using quality. Previously is momentum, but the stock is somewhere within so-called pretty much flat. But in terms of the asset quality, the rating is quite high at 8.2. So that's the first one, Aerostat. The second would be autocount.com. Now, what makes it so interesting is if you look on the slightly bigger time frame, you can tell that the stock has actually declined quite a lot since the IPO. The notable change or gain come on the last October, but the gain was pretty much kept within the major 38.2 Fibonacci level. So we see another round of consolidation. So the beauty of it is this long period of the consolidation has actually built a new and stronger baseline for the stock. So we've seen a slight improvement, a new higher low structure, higher low, higher high structure, followed by yesterday breakout. This actually gave you indication that the trend may start to shift upward. So we've seen numbers of the justification for momentum picking up and positive reading in MACD, trading volume also on the rise. So this actually could start of the new uptrend movement. So because of that, we highlight the stock as one our top pick for the day. In terms of the risk to reward ratio, we think quite attractive at 1 to 2.62. I mean 9% downside risk with a potential 23 or 24% upside potential, as we put our next technical resistance at 79.5 cent and 88 cent, while the cut loss below 64.5 cent. So that's the second stock. Last but not least will be IFCA MLC. So one of the major reasons why we like the stock, if you look on the long-term trend, it's still on the downtrend movement. But since I think since the start of the June last year, the what we call that, the major trend could start to shift upward. So this is the long-term downtrend line. So you are seeing a new phase for the stock. So the new phase, seeing the stock is actually building a new baseline above 26 cent. And another interesting aspect is the consolidation within this what we call that, a triangle pattern. So this consolidation has ended following a breakout move on last Monday. And the subsequent, pullback here completed a classic 1-2-3 pattern. So a new 1-2-3 pattern has been validated the breakout that happened last Monday. So on the back of that, we have a higher trading volume, momentum, consistently trading higher, and MACD also turning positive. So we're expecting the uptrend to continue as we put the next technical resistance right at 35.5 cent and 40 cent, giving you the decent risk to ratio of 9% downside risk and 25% upside potential.
do do do.